Fortis acquisition will give a strong franchise to IHH to significantly scale up its India footprint, considered to be its fourth strategic market worldwide. The board of directors of Fortis Healthcare Limited has selected the binding investment proposal from Malaysia's IHH Healthcare Berhad to invest 4,000 crore rupees by way of preferential allotment at a price per share of 170 rupees per share as the winning bid. The development comes a little more than a year after IHH, the world's second-largest provider of integrated healthcare services by market capitalization, pulling out of bilateral negotiations with the then-promoters Malvinder and Shivinder Singh. The other bidder for Fortis was the consortium of Manipal hospitals and TPG. The bid price of 170 rupees per share offers a premium of around 20% to the current market price and 30% to the unaffected price as on the 2nd of July 2018. The investment will also address the liquidity concerns of India's second-largest hospital chain, Fortis said in a statement on Friday morning. IHH will also launch an open offer of up to 3,300 crore rupees to acquire an additional 26% shareholders of the company at a price no less than 170 rupees per share. Their proposal provides for refinance of debt to the extent of 2,500 crore rupees. Funds infused to be used towards completion of acquisition of assets of IHH, SRL private equity minority shareholders and short-term liquidity needs. In comparison, Manipal TPG had offered to infuse 2,100 crore rupees through subscription to the preferential allotment at a price of 160 rupees per share. The proposal also included buying out the PE investors of Fortis Diagnostics Arm SRL, who owns a third of the company, for 1,134 crore rupees, acquisition of assets of IHH partially by utilizing proceeds of preferential allotment and partially through debt financing, and the eventual reverse merger of Manipal hospitals with Fortis, valuing the former higher at 6,070 crore rupees and the latter at a price per share of 160 rupees. A rights issue or a QIP post the merger to repay the bridge funding raised to complete acquisition of assets of IHH, the Singapore-based trust that owns several of the hospital assets, was also suggested. Fortis holds 29% in IHH. The transaction is expected to be completed within 7 business days of receipt of shareholders and CCI's approval, which will be obtained concurrently with shareholders' approval and can take approximately 60 to 75 days. IHH is present across 9 countries through 49 hospitals and more than 10,000 licensed beds. The IHH proposal offers a more strategically and financially compelling proposition along with simplicity and certainty. The process was relaunched on the 29th of May 2018 and has been conducted in a fair, time-bound and transparent manner. The release of the audited FY 2018 financial statements was a key milestone in underpinning the overall success of the transaction. As part of the process, we look forward to continuing the dialogue with our shareholders ahead of the EGM to approve the transaction, said Ravi Rajagopal, chairman, at Fortis. Interestingly, both bidders have revised their bids downwards for the final round. Since earlier this week, the Fortis board along with their advisors Standard Chartered Bank and Arpwood has been evaluating both offers in consultation with their lawyers Cyril Emergent Mangaldas and Vaish Associates, based on a number of parameters including a minimum capital commitment of 1,500 crore rupees by way of preferential allotment, detailed funding plan for the acquisition of IHH Health Trust, the separately listed Singapore-based trust that holds Fortis's real estate assets, with a long stop date of September 30, 2018, and a blueprint for the diagnostics arm SRL, including an exit strategy for private equity investors who own a third of the unit. Before binding offers were sought, IHH offered to infuse up to 7,400 crore rupees for over 50% in Fortis Healthcare at 175 rupees per share. Manipal TPG in May proposed to infuse 2,100 crore rupees through a preferential allotment at 180 rupees a share, which would allow it to own 18.4% in Fortis at a valuation of 9,403 crore rupees. It also planned to buy out Fortis unit SRL Diagnostics as PE investors for 1,113.4 crore rupees. In the third stage, it agreed to merge Manipal Health Enterprises with Fortis Healthcare after restructuring the SRL board. Citi and HSBC are working with IHH. The Fortis acquisition will give a strong franchise to IHH to significantly scale up its India footprint, considered to be its fourth strategic market worldwide. India accounted for 6% of IHH's global revenues in 2017 and 1% of the global EBITDA, and is still making losses at the PAT level. But IHH CEO sees the market contributing 15 to 20% of overall top-line revenue over the next 5 to 10 years. Backed by Malaysian sovereign fund Khazanah Nasional, IHH has had a strong presence in India since 2002 and has already deployed over $500 million in investments. In 2015, the IHH's Parkway Pantha acquired 51% of Continental Hospitals for 300 crore rupees and 74% of Global Hospitals for 1,280 crore rupees, both based in Hyderabad. In May last year, IHH ended its 12-year association with Apollo Hospitals after netting 1,900 crore rupees from the investment. Interestingly, IHH and Fortis had competed aggressively against each other when the Singh brothers, erstwhile promoters of Fortis, unsuccessfully tried to acquire Parkway in 2010. Fortis board to decide on IHH Manipal TPG bids this week. Manipal-led bid for Fortis faces objections. Source side a counter. TPG Manipal's bid for Fortis Healthcare revised. Manipal offer for Fortis fails to excite Street. Rakesh Junjunwala questions Fortis deal with Manipal commenting feature is disabled in your country, region.